gold surges past 4,300 per ounce, gearing up for its strongest week in half a decade. Imagine the thrill for investors chasing that shiny allure. But here's where it gets fascinating. As global uncertainties mount, gold isn't just a pretty metal, it's becoming a beacon of stability. Let's dive into the details and unpack why this rally is capturing everyone's attention, even if you're new to the world of commodities. Picture this. Bars of gold, pure as can be at 99.99%, being handled in a bustling workshop at the Novosibirsk Precious Metals Refining Plant in Siberia, Russia. This snapshot from September 15, 2023, courtesy of Reuters, reminds us of gold's timeless value. Now, fast forward to today's headlines. Gold has just hit unprecedented highs, and it's not slowing down. Summary: worries about U.S. regional banks' credit health are sending shivers through investor circles. China is pointing fingers at the U.S., accusing it of sparking fear over export restrictions. A Federal Reserve governor is backing the idea of trimming interest rates. Dated October 17, Reuters. Gold climbed to a fresh peak above $4,300 an ounce on Friday, positioning itself for its most impressive weekly performance since March 2020. The driving forces? Hints of fragility in America's regional banking sector. Escalating trade disputes worldwide and bets on additional interest rate reductions, all pushing savvy investors toward this classic refuge asset. As of 02:33 GMT, spot gold edged up 0.3% to $4,336.18 per ounce, having touched a new record of $4,378.69 during the trading day. Meanwhile, U.S. gold futures for December delivery surged 1% to $4,348.70. If you're curious about staying in the loop, sign up here to get the latest updates on gold's wild ride. This precious metal has jumped roughly 8% this week alone, marking its best stretch since early 2020, with daily record highs becoming the norm. Spot silver dipped 0.7% to $53.86 per ounce, but remained on pace for a weekly uptick. Prices even flirted with a record of $54.35 earlier, mirroring gold's momentum and fueled by a squeeze in the spot market. Think of it as a sudden, intense demand that drives prices up quickly. For gold, $4,500 might be on the horizon faster than many anticipate, though a lot hinges on how persistent worries about U.S.-China relations and the government shutdown remain in the mix, noted Tim Waterer, chief market analyst at KCM Trade. China has ramped up its criticism of the U.S., claiming it's whipping up hysteria around rare earth export controls, and firmly refusing to back down on those restrictions. For beginners, rare earths are crucial minerals used in things like electronics and renewable energy tech. Control over them can feel like a high-stakes game of global leverage. On another front, Federal Reserve Governor Christopher Waller has expressed endorsement for yet another rate cut, citing unease in the job market. Markets are broadly anticipating a 25 basis point cut. That's a 0.25% reduction in interest rates at the Fed's October 29 through 30 gathering, with another possible trim in December, USDIRPR. Meanwhile, Wall Street ended Thursday in the red, with vulnerabilities in regional banks unnerving traders already rattled by U.S.-China trade clashes. The latest spark in U.S. regional bank credit issues has handed buyers another compelling case to flock to gold, Waterer added. Non-yielding gold, which thrives when interest rates are low since it doesn't pay dividends like stocks, but holds value, has skyrocketed over 65% year to date. What's powering this? A mix of worldwide political strains, aggressive predictions of rate cuts, purchases by central banks, moves away from the U.S. dollar as a global standard, and strong inflows into exchange-traded funds, ETFs. Those are like baskets of gold you can trade on the stock market. Geopolitically, things are heating up. U.S. President Donald Trump and Russian President Vladimir Putin recently agreed to yet another summit to discuss the Ukraine conflict. Western countries are keeping the pressure on Russia regarding its oil exports, with the UK slapping sanctions on key Russian oil companies. Platinum slipped 0.7% to $1,701, and palladium dropped 0.4% to $1,607.93, but both were still headed for weekly rises. Reporting by Anmol Chobe and Ishan Arora in Bengaluru. Editing by Rashmi H. and Subhranshu Sahu. Our Standards, the Thomson Reuters Trust Principles. Anmol covers commodities markets with a focus on metals, energy, and agriculture. Outside of reporting, he's passionate about geopolitics, often delving into books on global strategies and political thrillers. And this is the part most people miss. While gold's shine seems irresistible now, is this rally a golden opportunity or just a fleeting panic buy? Some argue that ongoing tensions like US-China trade wars could sustain prices, but critics wonder if over-reliance on gold as a safe haven might mask deeper economic woes. After all, what happens if rates rise again, or geopolitical deals actually stabilize? Do you see gold as a smart hedge against uncertainty, or is it overhyped? Will the Fed's rate cuts really fuel a longer bull run, or are we due for a correction? Share your thoughts in the comments. Do you agree with Waterer's $4,500 prediction or think trade frictions will cool off soon? Let's discuss.